For more on this, we're joined by Josh Mahony in London, Chief Analyst at Scope Markets. Welcome back to the programme, Josh. Now, we've seen a sharp fall in oil prices. Does this suggest that geopolitical risk was doing most of the heavy lifting in prices recently?
Yeah, I mean, it's notable that we've seen this sharp pullback. Worth noting that this is just a percentage of the gains that we have been seeing in the lead up to this. Now, certainly there have been some fears around the Iran issue and the fact that Donald Trump is now coming out and saying, look, they're going to stop the killings, they're going to stop the assassinations. So look, ultimately, that to markets means that we're not necessarily going to see the US go in a military front. Whether that is just a cover for him to then make the move remains to be seen. But certainly things from a sort of oil and gas perspective would probably be cleaner if he doesn't go in and in actual fact just lets it sort of fall apart by itself, which appears to be the case. There's rumors that there's a number of banks that are potentially on the brink of collapse, as it is anyway. And of course, the imposition of sanctions on any countries doing deals with Iran mean that the inflation issue is only going to get worse. But certainly, you know, at the moment, it's a case of just wondering exactly what the outcome's going to be, how it's going to play out. And if we do see the US move in a military sense, suddenly it starts to become a lot more complicated. You see risks over the potential for a closure of the Straits of Hormuz, which of course would throttle supply, and then you're likely to see oil rise once again. But certainly after a few days of gains, we're seeing prices start to ease a little bit now.
And there's also been a pullback in silver and gold following those record highs that we saw just yesterday. Why are we seeing this shift in appetite?
Yeah, again, I mean, look, ultimately, markets don't go up in a straight line forever. And if you zoom out, you probably would say that it has gone up in a straight line. But within that, you do see pullbacks. And certainly, there's a number of different factors playing into the price of gold and silver and platinum and palladium, for that matter. And certainly, the geopolitical risks that have been rearing their head recently have been a key factor of that, notably with the devaluation of the real. A lot of Iranians have actually been trying to get into cryptocurrencies and also gold to try and preserve what assets they do have. And therefore, if you see a flare up once again, then you're likely to see gold and silver benefit from that. But when you see signs that the US isn't going to go in on a military front, then you do see a little bit of profit taking, which quite frankly is natural considering the near enough rampant sort of 7%, 5% gains we're seeing at the moment every day for silver in particular.
Right, so with oil and safe havens retreating, is this essentially a sign of confidence that tensions are easing, or are markets underestimating geopolitical risks given that both Iran and Venezuela are OPEC members?
Yeah, no doubt. I mean, look, the geopolitical risks are still there, and no one really knows exactly how this is going to play out. We didn't know that we were going to see strikes previously on Iran, and then suddenly it happened. And in actual fact, the swiftness of that was actually quite beneficial for markets. Didn't have a huge knock-on effect. But if we do see the regime toppled over in Iran, and if the US is at the forefront of it, it does have major questions over exactly how it's going to play out and how they potentially retaliate. So I think volatility is likely to come ahead, and exactly how this resolves itself will be key in driving short-term price action for precious metals and energy markets.
Right, we will have to wait and see. Josh Mahony, Chief Analyst at Scope Markets, thank you very much as always.